Good morning, guys. How you doing? Hey, sorry about canceling class on Wednesday and doing this recording today. But as I mentioned, I'm having some medical issues, and I'll fill you guys in on these issues. But I'd rather do it when we're face to face, either through WebEx or in person or both. So, so I just wanted to apologize for that. I always hate missing class and not being able to interact with you guys. So I appreciate your patience. Um, I know that this week we were supposed to launch right into chapter 6, and hopefully I'll be able to crank out another little recording or a video. So hopefully we can get that posted. But I'm not sure if that's going to happen or not. But don't worry, we're going to be able to catch up, and we'll be just fine. So I have plenty of cushion in with the other modules and the other chapters, so we're good to go. So we had the quiz on Monday. Actually, I extended it through Tuesday. And I think overall, and as you can see from the stats here, I think overall the class did pretty good. I always like to see the average score in the 90s, but we're pretty close, 88, which equates to about a 35 out of 40. So there were a few hundreds and there were a few lower scores, and the average time that you guys took was almost 41 minutes. So I'm going to walk through the quiz, and that's what the focus is going to be for this little video. And so I wanted to let you guys know, if you are a little disappointed in your quiz score, don't worry about that. I know you'll bounce back and do great. But keep in mind that you are in 100% control of 40% of your grade in this class, because 20% is attendance, and the other 20% is the assignments. So if you complete the assignments and you attend most of the classes, whether it's WebEx or watching these recordings or listening to these recordings, then you'll be in pretty good shape, even though you may not do as well as you would like on your quizzes. So don't feel bad. You'll be able to still do excellent if you're able to attend and to do the assignments. So let's take a look at the quiz. Here's the breakdown. This is pretty cool that Canvas does give you this breakdown, which is why I like using the online quiz template, because it just makes it really easy to provide the feedback and calculate everything. So question 1, the study of personal finance involves how people blank financial resources. Well, it does involve all of these. So spending, saving, investing, that's all part of the wonderful subject of personal finance, which is obviously what we're studying. So Jeremy and Sarah's family income, this is question 2, increased from $60,000 to $63,000 in the past year. Inflation was 2% over the same year. Which of the following is true regarding Jeremiah and Sarah's income? So the answer is 2. Their nominal income increased by 5%. So the nominal increase or the nominal income is what your actual income is, not adjusted for inflation or anything else. It's just what it is. So so their increase was from 60 to 63. So their nominal income is 5%, which is the $3,000 that they received as an increase. So the other answers were just not accurate. So the answer is the second one. And let's see, we had 23 students answer that correctly, so 82%. So I had a few of you guys missed that one. Okay, question 3. Referencing the above question, how much is Jeremiah and Sarah's real income after the $3,000 increase? Well, everybody got this one right, 61,765. And all you do to figure out the real income is take your nominal income and divide that by what the actual increase would be, the adjusted increase. So in this case, it would be 2%, because we had a 5% increase and 2% inflation. So, actually, what we're doing is we're adjusting it by, sorry, scratch what I just said. So the formula is the nominal income divided by the adjusted amount, which in this case is for inflation, which is 2%. So that's how we get the 61,765. Okay, question number 4. The U.S. government measures inflation using the CPI, the Consumer Price Index. So I had just about everyone got that one right. All of the following are key steps to successful career planning. So everyone got this one right. Definitely don't want to blow up the exchange at Marion, one of the finest career development centers in the country. Number 6, financial plans should include objectives and goals in which of the following areas? Spending, risk management, capital accumulation, all of these. Yeah, your financial planning should include all of these items. Sure, a lot of people will want to focus on investment aspect of your financial planning, and that's the big portion of it, and how you accumulate more assets for sure. But also, it wouldn't be complete if you didn't also have a spending and budgeting component in your financial plan. So number 7, which of the following goals is most clearly stated? So we talked about this in class, and the goals are really not just personal financial goals, but really any goals should have some specificity to them, and so it should have a dollar amount and a time frame and for what use. So the only one that meets those requirements would be the second one, saving $1,000 in 1 year for a vacation. The other answers are not specific enough. And just about everyone got that one right. So number 8, which of the following provides information about a person's financial condition at a specific point in time? It's the balance sheet. And for those of you in accounting, this should be an old hat. You know that whether it's a personal financial sheet or a business balance sheet, that it just measures where you're at in terms of your assets, liabilities, and net worth on that particular date. So it is very date sensitive. So the answer is A. So we had several people miss these, and 8 people responded all of these. But the federal tax return and the income and expense statement or the cash flow statement all are for a period, not a specific point in time. So little tricky there, but that's the distinction. So your federal tax return, if you're filing this year, they're for all of 2020, and usually your income and expense statement is either monthly or it's on an annual basis. Okie doke, moving on. Number 9, which of the following is classified as a tangible asset? Well, cash is is cash or monetary. A mutual fund is an investment, and 401k is also part of your investment plan. So it would be a motorcycle. It's part of your stuff. Number 10, checking debit account statements provide a source of information of value of your expenditures. It does not give you your balance sheet components, which are your assets, liabilities, and net worth. That's a different type of financial statement, and if you're looking at your bank account daily or weekly or monthly, you'll see what you're spending. So that's the source of information. Okay, 11. You pay personal taxes on your calculated, survey says, taxable. Just about everybody got this one right. And we spent time talking about that we are trying when we're doing our tax planning to get our taxable income as low as we can, because that is what we're going to be paying our taxes on. So it's taxable income. So Mark is an MU student seeking a degree in business management. He received a scholarship for $6,000. His income was used as follows: $2,400 for tuition and fees, room and board, $3,600. How much of the $6,000 is included in the gross income? And I went over this in our discussion last Friday in preparation for this quiz, specifically mentioning that tuition and fees from a scholarship are would not be included, and but your any type of perk for room and board would be included in your gross income, so you would be taxed on that. So so how much of that 6,000 is included and is taxable? It's the room and board amount, which is this 3,600. A little tricky, but we covered that on Friday. Question 13, which of the following types of subtractions cannot be taken by a taxpayer if he or she itemizes deductions? Just about everybody got this right. The standard deduction. So you take either one or the other. So you can't take the standard deduction if you are itemizing. Number 14, which of the following is not a way of reducing taxable income? This is a little tricky. Reducing deductions is the correct answer. If we want, so here's the confusing part, because we're saying we want to reduce the taxable income, as I mentioned before. And so at first glance, you go, well, reducing deductions, shouldn't that reduce taxable income? No, if you reduce your deductions, that is not a good thing. You want to increase your deductions. So increasing your deductions would reduce your taxable income. So a little tricky. And the others are not the correct answers as far as a way of not reducing taxable income. These others are ways to reduce your taxable income. 15, a federal income tax system that progressively increases the taxpayers' taxable income increases is known as the progressive tax. We talked about this, and Wayne talked about this as well. Okay, number 16, which are of the following are examples of monetary assets? So the answer is the money market accounts, cash on hand, and savings accounts. So just about everybody got this one right. Stock is not considered a monetary asset. It's not liquid. You're not able to convert that into a monetary asset quickly. So money markets are at your bank, easily accessible. Cash is cash, and then your savings accounts. 17. Which of the following could incur fees and penalties on a checking account? And everyone got this one right. All of the above. 18. Have your pay sent directly to your bank rather than a check given to you as a type of direct deposit. And for those of you who work, chances are you had the option, if not mandatory, direct deposit into your checking account. Some smaller firms will still cut you a check, but for the most part, direct deposit is a good thing. And 19, the speed and ease by which an asset is converted into cash is referred to as liquidity. Everyone got that one right. Good job. And the last of the multiple choice questions, 20, which of the following is a reason why you should monitor your bank accounts regularly? Everyone got this one right. So you guys are all right on the mark as far as understanding the importance of monitoring your accounts. All right, now to the true, false questions. Financial success is always marked by having high wealth. It's a little tricky. Just had two people miss this, but it's false because, and we spent some time talking about this. In fact, your first assignment was to talk about your personal financial goals. And as part of that, I really emphasized how personal finance is personal and how we each define what financial success is going to vary. For a lot of people, having a lot of assets and high wealth is a measure for them that they've made it and they're successful, and that's a goal, and that's cool. But for others, it's not. They can still be financially successful without having high wealth. And I think the key here is always marked by having high wealth, and that's not necessarily true. So, false. Number 2, the preferred stage of an economic cycle is the contraction phase. And you remember that curvy graph that shows the typical economic cycle. The contraction is when we're kind of on the roller coaster ride down. So GDP and other economic factors and indicators are showing that we have a pullback from growth in the cycle. So that would not be the preferred stage. The preferred stage would be as we're going up the roller coaster, as the economy is expanding. So the expansion phase is the correct answer. So that is false. In times of moderate to high inflation, people on fixed incomes suffer. That is true. We haven't seen high inflation in quite some time, but whenever we do, you tend to hear a lot of people, talking about, especially seniors and folks who are on fixed incomes, because their amount that they're receiving is the same. So if there is high inflation, then their money, their buying power is less and less because their income is fixed. Inflation's making that impact and digging into the value of the money that they have. So their income is buying less and less because they don't have an adjustment for inflation. When it's very low inflation, it's pretty moderate type of issue, but obviously when inflation is high, then that can really make a difference for folks. Okay, number 4, when one forgoes buying a new TV because he or she spends money on college books, a TV is the opportunity cost of buying books. That is true. That is what an opportunity cost is. And this particular case, that TV, because that is what is foregone, Not sure if that's proper English, but then that would then be the opportunity cost. So it's true. A career plan provides guidance to help you attain your goals. Absolutely, everybody got that. Number 6, job seekers should focus primarily on salary as employee benefits are not a major contributor to overall compensation. False. Salary certainly is important, and right after you guys graduate, that I understand that's going to be the focus. You want to try to make as much as you can, but benefits, especially healthcare benefits, and the other perks that come along with being employed, can be anywhere from 25 to 40% of your overall salary. So whatever your salary is, just think of tacking on 25 to 40%. So benefits are a big deal, and should be something that you seriously focus in on. And just about everybody got that one right. A resume is a summary record of your education, training, work experience, other qualifications. Everyone got that one right. Good job. Prior to a job interview, you should research the company's competitors and industry. Of course, everyone got that one right. It is not necessary that your values be consistent with your financial and lifestyle goals. False. Everyone got that one right. Number 10, effective financial goals should be stated explicitly in terms of purpose, dollar amounts, and projected date for achievement. Everyone got that one right. That's true. 11, successful financial planning requires identifying the one best investment asset for an individual, then putting an individual's entire surplus into that asset. I don't think so. That would be like taking all your savings and going to Vegas and using the roulette wheel and putting it all on red and hoping that you'd win. So you wouldn't want to do that. Number 12, the cash flow statement, a personal income statement for a previous year would show whether or not you were able to live within your income. True. The personal income statement, cash flow statement, those terms are interchangeable, but it just lists your income and your expenses. And so by calculating that, you would be able to determine whether or not you are going to end up with a surplus or a deficit. And that clearly indicates whether or not you are able to live within your income. Number 13, the tax paid on the last dollar of income is called the average tax rate. That is false. The average tax rate is the actual tax dollar amount that you pay divided into your taxable income, and then there's going to be a percentage, and that's your average tax rate. The tax rate paid on your last dollar of income is called the marginal tax rate. So if you're making 60,000, you're in the 22% tax bracket, and so you would be in the 22% tax rate category, and that's called the marginal. That's your marginal tax rate. The average is just taking what you pay totally and divide that in to your taxable income to come up with that average. So the average is going to be less than that marginal because, as we've talked about, our tax system is progressive. So it increases as you earn more, but you're going to pay less at the lower levels. 14, the money you receive back because you overpaid your taxes is called a tax return. Oh, I try to warn you guys about this. Specifically, I said, hey, when you're doing the actual form is called the tax return. The money you get back from your tax return is called a tax refund. So it's a little sneaky, but I warned you guys. 15, a taxpayer whose itemized deductions were less than his or her standard deduction would benefit by itemizing deductions. No, if your itemized deductions were more than what the standard deduction is, then you'd benefit by having the itemized deductions because it's more than the standard deduction. So it is false. Um, but keep in mind, 92% of all American taxpayers are taking a standard deduction because that change was made, and now it's so high that even though folks who in the past had benefited from itemizing deductions are now benefiting from the standard deduction. But the bottom line is you calculate your itemized deductions as if you're going to take that, and you take a look at that number, you compare that to your standard deduction, and obviously, if the itemized deductions are higher, then you take it. Lower, you would just use the standard deduction. 16, the amount of income tax withheld can be found on one's W-2 form. Yes. So it's true. Credit union, number 17. Credit unions typically offer the widest variety of financial services. Again, we talked specifically on Friday about the credit unions. They do not. They provide very similar services to banks, but the full service banks, especially the big ones that we are all familiar with, offer the greatest variety of the different types of financial services, especially when it comes to different types of investment services. So that is false. 18, interest earned from savings accounts typically pay higher interest than certificates of deposits or CDs. That's false. Savings accounts really are not paying anything. For those of you who have savings accounts, you know that. What about CDs, though? Well, CDs will pay a little bit higher interest, and they should, because you are obligating your dollars for a guaranteed time frame. So if you put money in a CD for 1 year, that means that you can't touch that money. It's your money, but you can't touch it because you obligated that for 1 year. So because of that obligation, that time frame that you're guaranteeing that you're not going to pull out, the bank's going to pay you a higher level of interest, as they should. Savings accounts do not have any type of commitment on your part, so they're not going to pay you much of anything. All right, 19. The FDIC, Federal Deposit Insurance Corp, provides consumer deposit insurance up to $250,000 per account. And you guys all got that one right. That's good. And then the last one, banks offering a free checking account means that there are no fees for writing bad checks or using other banks' ATMs. That is false. Free checking means that they're not going to provide or charge you service fees for using your checking and debit account. But if you are doing things that cost them money, like writing a bad check, and other things, are still going to hit you with penalties. And now some banks do offer some free reciprocal ATM benefits, but if that bank's being charged, then they're certainly going to pass that on to you. So just be aware, as I've mentioned several times, of what your checking and savings accounts, and really all your accounts with the bank, what you're being charged for, and especially when they're enticing you to open an account and they'll say you get free this, free that. Well, make sure you read the bottom line, because typically not everything is free. All right, so that was the long question by question feedback from the quiz. And like I said, overall, I think you guys did pretty well. We had a few tricky questions in there, but like I said, don't worry if you didn't do as well as you wanted to do. we still have 2 more quizzes, and then, of course, the assignments, and then attendance too. So make sure that you watch all the stuff you're supposed to watch, and yeah, go ahead and cruise through Module 6 and go through the chapter notes. Read Chapter 6 as well. Hopefully, you have the book by now. If you don't, then chapter notes will certainly help you out because they're also narrated. Anyway, certainly let me know if you have any questions. And like I said, I'm going to try to do a video or another recording. Um, so so be looking for that, and also communicating with you guys via email. So we'll talk to you soon. Have a great day.